Well, you bring up 2 points there, the pace at which vaccinations come out, and also if we expand fiscal stimulus, if we get additional, an expansion of the direct checks, if we can go from 900 billion to 1.9 trillion, these things, they're definitely going to be helpful for equities in the short term. But keep in mind, something that Treasury Secretary Yellen brought up was that, we need this sense of fiscal sanity. So as we expand in the deficit to fund this recovery and fund monetary support and fiscal support, then comes the question, well, how do we afford it later down the road? And something she floated was higher corporate taxes. So you think of the trade that we expected to play out over 12, 18 months. If that's fast forwarded to burn hotter and brighter, it also may be shorter lived. And then comes into question these elephants in the room of how is this going to be built? How are we going to pay for it? And that could be headwinds later down the road that, frankly, in the beginning may look hot and bright for equities, but could be serious trouble later down the road.
Anna, there's been renewed interest in investing back in cyclicals again once we started getting the positive news on the vaccination front in November. So it's been a couple of good months for the cyclicals part of the investment market. And we've had some results out of the US banks in the last couple of days pointing to very strong earnings for Q4, particularly on the investment banking side of things. The better positioned banks were the likes of Goldman Sachs and Morgan Stanley. Do you think that this strength in earnings is going to translate into further upsides in banking stocks in 2021?
Well, we're not too surprised to see that banks are performing well through earnings. In fact, they have a lot of cash on the balance sheets, and they weathered, the recession and the economic pause we saw last year quite well. So now, if they're able to hold up this good pace of earnings, something to keep in mind too is that they'll be approved again to start share buybacks, even as early as Q1. So that could be an even another reason for why banks may see more potential upside. And banks are part of that cyclical trade. They're very economically sensitive, and that's going to boost that side in the short term. But keep in mind as well, in addition to banks and higher earnings, some other sectors may actually struggle to keep up with expectations, where expectations have been put higher because of the hot pace of recovery we saw in 2020. And that actually may cause a bit of the more sell the news reaction investors. If investors are seeing that with this higher bar to hop over, companies are unable to deliver those promised earnings, it may actually cause some headwinds, and there may be a bit of a correction in terms of valuations. So that's something we're watching for in this earnings season. We'll have to see how it plays out.